Good morning. Good morning. Today is Friday, October 16th, 2020. Stock I'm going to talk about today is HTZ. This is a lot higher than what I like to trade as far as float. Market cap's okay, 163.86 million, but the float is 155.64 million. Let's go into why I traded this thing in the first place. As you can see, it has been a previous runner in the past from below $1 to over fives to the sixes. Same thing here. But it had great news this morning. Let's see. It had great news this morning. Where is it? Hertz Global Holdings secures commitments of $1.6.5 billion. Basically a financing deal. And this shit just ate me alive. As you can see, I took a 13% loss on this. Way over what I like. And let's get into the mental errors that went down because as you can see, so let's get into here. As you can see, pre-market had a beautiful gradual climb, just like how I like to see them. And it was trading heavy volume. So let's get into here. Actually, let's go right here. So if we go here, it's already traded over 200 million shares. So it's already rotated the float, okay? So it rotated the float already. It had a beautiful climb, and I wanted to buy the pre-market break over the 250. That was the plan, even though it didn't meet the criteria of my float. It did meet criteria as far as the pattern I'm looking for, which is a pre-market breakout. It met the criteria as far as what I like to see in the technicals, which is the chart pattern, which is a gradual climb. And then when it opened, it just had this huge run, a huge squeeze. So when I started seeing that squeeze, I've been seeing lately the squeezes. So from the break of 250 to a high of 286 was a 9% squeeze. So I could have captured a 4% move in there, okay? But, again, a mental error, and this mental error cost me a minus 13% today, which is huge in one trade. This is probably the biggest loss of day trade I've had. It is actually the biggest loss of one single trade I've had since I've started. So where the error came in was when it broke here, it moved so fast. It topped me out. It literally sold me. When I just start seeing squeeze, and no pullback. I was waiting for a pullback candle, but mental error. When I just kept seeing it squeeze, I hit the buy the ask, and it just so happened to execute me at the very top of this candle. And next thing I know, it pulls back here. So it had a nice, I'm trying to do -2 +4, okay? Which is why I typically would wait for this pullback, because if I would have just waited for the pullback, I had the opportunity to make a 6.2% profit, but I did not wait for the pullback. This candle made me feel like it could just continue to squeeze because of the strength of this one candle. 17 million shares traded in this one candle. And when it broke the pre-market high, it just kept going. So I had, by the time it's in the 70s, that's 20 cents off of the 250 break, which is, about a 5% move, a 5 to 6% move over the break already. And I just felt like this thing was going to continue with strength. And so when I hit the buy, it topped me at the top of this candle at 277. The top of this candle is 278. and it sold me right there. And then instantly it pulls back right here to the 261. So if we do the math, 277 minus 261, I was immediately down 4%. And at that point, I knew I would see some type of bounce, and it did. And it bounced up to 286, which I was up roughly around almost 3% profit, almost 3. But in the high twos, and that just, obviously that wasn't the goal. And so I thought it would continue to squeeze just a little bit. And I held on to it. And in this candle, the next thing I know, I was down 10 cents here, which put me at minus 2.5. And then all of a sudden, popped back up, had a little bounce here. Yep. And then all of a sudden, this thing just tanks on me. And next thing I know, I was down minus 5%, and I tried to hit the button, but it didn't go through. And so I had to hit the button again, because sometimes that's happened to me before, where I click, but it doesn't actually click it. I honestly don't know. But I was down about 5% quick in this candle when I tried to hit the sell, but for some reason it didn't actually click. And then it just kept tanking on me, and then next thing I know, I was down 10%, and so I'm in, hey, what the hell? I'm trying to get out and hit it again, and then it gets me out at minus 13% on the day. So takeaway from here again: patience with these squeezes, man, because these squeezes could really eat you alive. And obviously, this already blew past the breakout level I was trying to get in of 250. And now at the bottom of this candle of 261, that's not bad. If I would have tried to, because like I said, when it break, I want to see it pull back and then go. So if I would have tried to get the 250 shares here, I could have realistically made my 4%, because I had a max of a 6.2%. So I could have definitely captured a 4% move, and this candle just moved way too fast. So when it broke, I wasn't expecting this huge squeeze. So it kind of, whoa, it kind of, in my mind, I'm like, whoa, that's it. I was expecting maybe a pop of it and then a candle. I was thinking at 250, I was thinking maybe a pop to like maybe 260 and then a pullback and then it pops. But this just had a straight squeeze all the way to 278, and mentally it tricked me into believing that this thing was just gonna run, and so I fucking hit the buy the ask, and it just so happens to enter me at the top of this freaking candle, and then it dips down minus 2.5, but stayed in it. And then it goes up here, and then I was plus about 2%, plus like 2.5% here. But like I said, the goal was 4, and then it consolidated in this area. So like I wasn't down much from this candle. I was down minus 2.5, which realistically I should have just took it. But again, it's holding. It was consolidating in here, so I was expecting, because this one candle, I was expecting a pop. But again, this is not a low float stock, and I'm used to the low floats popping and squeezing like that. Even though this did trade more than the float during this time period, it was trading roughly the float. I was still expecting some kind of pop. But again, the one thing I deviated from here was the fact that it's not a low float runner. Its float is 155 million shares, and that's not typically what I trade. And even though everything looked beautiful about this chart, even though it did have a break of pre-market high and squeeze 9%, which is within my range of profitability, the one candle just squeezed too fast, Horrible execution on my part, all my fault. Um, Again, like I said, if I were gonna play this, just knowing that it's not a low float, I should have waited for the pullback and tried to buy this pullback. So, like I said, I like to see them break, then pull back, then go. So this broke, but it shot up way too high for me. Shot up nearly 20 cents. So that was a 6% pop right there in the one candle, and I had no chance of entering here because by the time I was watching it pop so fast, it was already in the 558, and so when I went to go, when it was about 558, 560, I was waiting for the pullback to click, and it just kept going, and that caused me to hit the buy, and it was a horrible, horrible decision, horrible execution, and it wound up costing me big time today. I was having really such a great week, but this one mistake probably put me at break even for the week, or even down like -1% on the week. So, again, it's a matter of sticking to what you know. I tried to play this like it was a low float, because if you see this in a low float, a squeeze like this, yeah, I might have a pullback, but then it would squeeze again, probably to the threes. And that would have gave me my profit. And I tried to play this like it was a low flow stock, but it was not a low flow stock. So a great lesson on HTZ. Yes, this was a beautiful play. Yes, it did pop and break. Yes, it was a beautiful chart pattern. Pre-market chart pattern. This is what I like to see, but with low floats, okay? And so when it had a beautiful chart pattern and then breaks the pre-market high and has a 9% run, realistically, if I would have been able to capture it in at the initial break, but it pops so freaking fast, and then all of a sudden, bang, 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 and that's how they move. They move extremely fast, and it just caught me by surprise that it had such a big candle, because throughout the whole pre-market, you don't see a candle like that in pre-market. This is the biggest candle of the day, which it's market open, so that could be expected, but that one candle influenced me to play this like it was a low float, which it was not a low float, and it dropped hard in this candle when I should have been exiting in this candle at a -2.5. This candle just tanked, and it winded up again low. But I mean, when they're extremely volatile like this, that could happen, and it happened, because I tried to approach this like a low float, thinking it would probably pop again to the threes, when it was super choppy in these three candles, from 260 to 286 down to 260s again. We're swinging 20 in the 20-cent range, all within these three candles. And 20 cents is roughly about 6%. For me and my position size, and bam, huge candle just dropped and kept dropping, and took a major hit, when I should have exited at -2. But lesson learned. This is not a low flow. This is not what I typically trade. But other than the low flow, it had great news. Financing of $1.65 billion, had a beautiful gradual climb chart pattern, had a pre-market breakout, which is what I wanted to capture, but I did not capture a pre-market breakout. I bought it on a squeeze at the top of the squeeze, so it didn't even really make sense to purchase it here, but I just chased the move. It was a chase. I tried to chase it. I allowed that squeeze to influence my decision, and I was thinking like it was a low float, that it would pop, and because at 277, if it popped to 3, that's a 23-cent gain, which is roughly about a 5 to 6%. 23 times 200 is 4.6, and then yeah, so about a 5.7% gain. So I could have took a 4, and that's what my thought process was. But again, that's what I'm used to seeing with low float stocks. This is not a low float stock. And that was my major downfall, because when I first looked at it, there's really nothing going on in the market, which should have been my sign. This one right here, SGBX, was on my watch. If it did squeeze, it had the potential, which everything met my criteria as far as market cap and float. I believe this was an 18 million market cap and a 7 million float, but the chart pattern pre-market was horrible. It already died out to me, had its run, and it's opening way down here at the market open. But it still had a potential to squeeze. It still had the potential to squeeze, and if it did, I wanted to capture it. But I allowed the chart pattern of I allowed this chart pattern to influence my decision, plus the news of a 1.65 billion financing, and you know, it was just a horrible decision on my part as far as execution goes, and trying to play this like a low flow, because these stocks trade differently, depending on the float, depending on the news, depending on a bunch of variables of how these things will react when you're actually playing them. And I mean, again, it did have a 9% squeeze, but it popped so fast in that first candle, I chased it. And the chasing led to a huge loss, my biggest loss of the year on a single trade. And it devoured me because I tried to play it like it was a float of 20 million or under, when this was a flow of 155 million. So, you know, huge error on my part. Tried to play it like something it wasn't. Went outside my comfort zone of something it wasn't. If I would have been able to land it at the break, yes, I would have profited from it. But again, I allowed that huge candle to influence my decision of buying a horrible entry price and then expecting it to move like it was a low float when it's not a low float. So again, I gotta stick to what I'm good at. You know, in trading, it's funny because I'm always, you know, taking a step forward and 2 steps back, you know? So like every time I catch me a good rhythm of moving forward, I wind up taking 2 or 3 steps back. But again, these are the lessons I'm learning in my trading journey, because I've never got to approach the market like this before. I've never actually had the opportunity to be able to trade on a regular basis like I am doing now. So it's a learning curve for me on where to really find my lane and understanding my comfortability in all areas, because with the amount of volume being traded in this particular stock, it was already trading roughly 200 million shares, which is a lot, and that's crazy. And it did cause a squeeze, but because it was such a higher float than what I'm used to, it didn't squeeze as hard as what I'm used to with the 20 million or under floats that I'm used to seeing. I'm used to seeing a big squeeze, you know, maybe a 20, 30, 40% squeeze. But this is a higher float stock, and it had a 9% squeeze and just tanked. Instantly from, you know, damn near tanked $1 from 286 all the way down to 194. So that was damn near $1 tank from the high. And it's just unfortunate that this happened to teach me a lesson today because I was having a really great week. And I believe I'm going to have to look through it, but I believe this one just either put me at break even for the week or it put me at probably about like a -1 on the week. I'll look through the data. And that continues to be the case because of mental error. And if I would just stick to what I know best, I would be fine. You know, if I stick to, obviously, if I would have stuck to the rule of -2 in this third candle, you know, I would have been fine with cutting a -2 on the week. But again, I allowed this one candle to influence my decision because it was so strong, and I tried to trade it like a low float, thinking that okay, this candle's either going to reverse or the next one is going to pop because you're seeing it consolidate right here. You know, you're seeing it consolidate, and it made a higher low here, here, and then here, and then here. So, you know, and I was just expecting it to pop because that's typically what I see with my low floaters. And this was not a low floater. So, again, stick to the lane of what you're good at and what you're familiar with. And for me, that's a low float stocks, 20 million or under. Did not stick to that today. That was the one criteria that I broke today. Was it was not a float 20 million or under, because a float is more important than the market cap. The float is what I'm used to as far as movement, and what causes major squeezes is because it's a supply and demand issue. So if there's 155 million shares to be traded like there is here, then there's a lot of supply for the demand. But if it's a 20 million float being traded 200 million shares, there's only 20 million shares to be traded. So there's a lot of demand for such a small amount, because if it's 200 million shares traded, that means it's rotated 10 times already. That means the same shares are being bought and sold 10 times over. When this is 155 million float and it's traded 200 million, it's only been bought and sold once and a little bit over once. So the supply and demand really isn't there like it would for a low float to cause a major squeeze. And it just, took a big toll on me because there's nothing I could do. I had to cut it. I couldn't wait. Like I said, I tried to cut it in the -5, -6 area, which is more than what I prefer. But I hit the button and it just didn't go through. So I had to hit the button again. And when it was down 10%, down $100. And it just didn't, then it executed me at 130 because I caught it in a drop. I'm buying the panic instead of buying strength. Or I'm selling into panic instead of selling into strength. And typically when you're trading, you want to sell into strength. You don't want to sell into a panic because your execution can be horrible. Which is why I do sell the market, because if I hit sell the bid, it could have put in an order at 257 and it blew past it, and now I'm stuck at 257 and it keeps going down, 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 and it won't execute. Which is why I use sell the market, because it'll just execute it at whatever price is the next price. And it's just unfortunate that I allowed myself to play this knowing it's not a low float. But, maybe it's a great lesson learned to make sure that I stay within my float range, because if I would have caught this, right here, and would have caught this, I could have made my 4% and been done for the day. If I would have got a good execution in this candle. But unfortunately, I was trying to patiently wait for the dip, and then when it just kept squeezing, I chased it. So, just remember that for the next time. Again, I've been maintaining roughly right in the same area because of these small mental errors that I have to get rid of. But recognizing these mental errors that I'm going through, is helping me eliminate them because of these videos. So, you know, I eliminated over trading because of the PPSI disaster, and now HTZ is now telling me to make sure I stick to my float range, because there's a huge difference in the movement of the particular chart when it comes to floats. And I was anticipating a huge squeeze because I'm so used to trading low floats that I tried to trade this like a low float. This is not a low float, so why am I trying to trade it like a low float? You know, so it learned that lesson today. Again, horrible entry price on my behalf. Chased it in this candle, bought it at the top of this candle, which is already 6% over where I wanted to buy it at. So that would have been a 6% gain in this one candle if I were to capture it at the break of 250. But I did it. I chased it. And again, when I say I want to see a break and then a pullback and then start grinding, I could have bought it somewhere in here in the 260s and sold it for a 20-cent gain here for a 4% gain. But again, I chased it. Horrible entry. Chased it. And the chasing led me to disaster. The trying to trade it like a low float led me to disaster. But it's not something I can't come back from, man. Minus 13%. That is huge compared to a -2, obviously. But again, it's a lesson learned to stick to my low floats. Stick to my low floats. This was a beautiful chart pattern, yes. Had a nice squeeze in the morning, 9%, yes. Potentially, was this potential? Yes, it had a lot of potential. But I tried to trade it like a low float when it is not a low float, okay? And that's the lesson that I learned here, was that, one, stick to the plan. It already blew past your entry point and you chased it. So that was number one thing that went wrong. Number two, I was down minus 2.5%. I should have exited. But again, this chart pattern, this huge candle influenced me to think like it was a low float, because that's what I'm used to seeing. And this is not a low float. So horrible entry for today, okay? 6% above your entry point, which you should have just patiently waited after that for now an intraday break of 286. That's what I should have waited for, an intraday break of here. Pullback, then a new high, then a pullback, and then, you know, if it would have had a nice move, it would have broke the 286. You know, so horrible entry. Chased the entry due to trying to play a 155 million float like a low floater of 20 million or less. So horrible entry. Did not stick to the plan of -2 because I was down minus 2.5 and I should have cut it there. And then trying to trade a 155 float like a 20 million or less float, and that costed me big time because I could not get out in this candle until basically the bottom of it. The bottom was 240 and it executed me at 244. So yeah, man, a minus 13% because of what? Because you chased, okay, HTZ, chased the break, and bought the high of this candle, which was already over 6% of your entry, chased it, didn't allow it to pull back, and that's where the chase came from, because when it broke, and I seen it in the 260s, I was expecting a red candle to come in the 260s, and then when it kept going, I thought it would just keep squeezing up, because again, I'm used to trading low floats, and that's what I see in the low floats. And so you have to put that in the perspective. This is not a low float, and these things trade differently. So, yep, horrible entry. Chase my entry point. Okay, gotta remember all this shit, man. That's why I make these videos. Chase my entry. Um, Not a low float, which is part of my criteria. So automatically chased the entry. That was a horrible entry, which is bad. Something to work on. If it breaks and it squeezes past, we'll wait for a pullback. But again, this is not a low float, so I can't allow this to manipulate the way I trade low floats. Because if this was a low float, with the volume that it has, it would have most likely squeezed. I mean, the odds are it would have squeezed to the threes and I would have collected my profit. So I can't allow this non-low float to influence my next trade. Just know that don't trade a float of 155 million. If it's over 20 million, if it's over 30 million, because I do like trading, 20s, so it could be 25, 28 million, depending on how much volume's being traded. But if it's not in the 20s or less, then just stay away from it. It's not in my criteria of what I'm looking for. So just stay away from it, because it costs you big time. And now we're having a huge runner here. KXIN. I just want to see what that is. KXIN. KXIN. See? Exactly how I trade. See, this is a 80 million market cap and a 1.09 million float. Already trading the float. And see what I mean? When you catch a big candle, they run. And this is a huge runner from $1 to $3. $1.30 to $3.30. This is a huge runner. And let's look, trading 6.4 million. So it's already rotated 6 times. That is what I'm talking about. And that is exactly the type of stuff that I look for. I am completely done for the day, and took my minus, but that's what I mean. I allowed my low float, knowing that when you see a big candle in the low float, could cause a squeeze. And this is what's happening here. This is a perfect example. I'm glad this popped up. Let's see. Auto share on volatility. Oh, it was halted. Oh, again, something to do with energy, electric vehicles. But yes, see what I mean? This is a perfect example. And it's in the middle of the squeeze now. Look at all this green print going through 350, 350, 350. And it was just halted, a volatility halt, because it went, it's up almost 200%. And that's why it was halted. But see, this is exactly what I mean. So when I seen the influence of this big candle come in, for here, I was expecting a major run. But again, that's how low floats are traded. That's not how these bigger floats are traded, because it's all about supply and demand. Supply and demand. If there's little supply, the demand goes higher and it causes the price to push up and squeeze out the shorts. The short sellers are the ones betting against the price, and those are the ones I like to attack. That's why I like the low floaters, because it causes a squeeze. So when you're trying to short it at the top, so here, it's already had a nice run from $1 to 286. So when it got here, the short sellers are coming in to short it. And so when there's a bigger amount of supply, then it won't cause a major squeeze, because there's too much supply. So they could just keep hitting shorts, throwing more shorts. But when it's a smaller supply, like a 20 million float or less, they start piling on each other and they can't get out. And then when they try to cut their loss, it causes a chain reaction of a squeeze to push the price higher, because now all the shorts are trying to get out. And then same thing happened here for me, is all these buyers are trying to get out in this huge panic, because they're getting squeezed out. And now they're hitting their stop losses, and we're all trying to get out at the same time, and it causes a panic. So, that's a perfect example. I'm glad KXIN just popped up because that's a 1 million float, which is beautiful, meets my criteria. And if I would have been patient, I might have been able to capture this one. Buying the break here. And look at that straight squeeze. So, lesson learned today, don't trade these higher float stocks like they're my low floaters, man. Because look at this beauty. 80 million market cap, 1.09 million float. This was a multi-day breakout too. Over 218. Yeah, so look, and that's when it had the huge pop. They had its pop over the high of the previous high. And that's when it had that huge candle coming. Very similar to what you see, very similar from what you see in Hertz. Once it broke the high over the red line, big candle. Once it broke the high over the red line, big candle. And then look what happened. Had its pullback and then a run. That's what a low floater could do. And that's why I try to trade this one, because I'm so used to trading low floats that that's kind of what I expected it to do. But it's not a low float. Too much supply for the demand, and it tanked on me here. Not enough supply for the demand, and it squeezed. That's typically what I'm looking for. So, lesson learned, man. Just stay away from, the higher floats. If it's not in the 20s or less, if the float isn't being rotated at least once or twice, then just stay away from it, because this is what the cause of me not sticking to that could happen, and that's a minus 13% on the day, because this was a $1,000 position size. Took a huge chunk of profits for the week. And it probably left me at break even for the week, or maybe just a little bit down for the week. So basically back to break even, man. And that's where I keep continuing to go. Ever since I readjusted since September 10th, everything has been running smooth until PPSI. And then PPSI, mental disaster that day, just trying to chase, and the fear of missing out. And then today again, a mental error of chasing and then trying to play this like if it's one of these. And it is not a low floater. There's a huge difference from a million float to 155 million float. And then this one just continues, squeezes, and this one could probably still keep going. As you can see, it's now, yep, there it goes, 388, 390s. Gonna hit fours, yep, squeeze, squeeze, squeeze. That's what I look for. So remember that, man. Just eliminate bad habits, eliminate what you're not good at, and stick to what you know. And low floaters is what I know. Low floaters is what I'm familiar with as far as when I'm executing these trades. Because realistically, if this was a low float, even buying at the top of this candle, maintaining in here, I would have still felt comfortable and been patient, which is why I was patient here, even when I was down minus 2.5, because of the potential of the float causing a squeeze. But this is not a low floater, and it did not have the potential to cause the squeeze I was looking for, therefore the drop. Stick to what I know. Low floats only. Okay? Low floats only. That's it. Okay? 20s or less. 20s or less. Nothing higher. Okay? Doesn't matter how beautiful the chart is. Because look at this beautiful chart. I love the gradual climb. I love this. Okay? I love this. This is a beautiful chart. But again, I don't have the data on 155 million float. I have the data on 20s or less. That's the data I have. So why trade that? And again, because I allowed that this was the only thing in pre-market that looked good. And again, yes, it had a 9% pop, but I chased it. I did not get my entry point I wanted. and I chased it expecting it to run like a low float. So that's the lesson here. This is not a low float. This is not in my criteria of float. And it cost me dearly today. Okay, so learn the lesson from HTZ. Stick to what I know. Which are the low floats? Floats in the 20s or less, and that are rotating the float. And this is a perfect example of why I trade those, because once it breaks the highs, look at this bad boy. The high was 220, ran to 450. So that's 100% move. 100% move in a few minutes. 1, 2, 3, 4, 5, 6, 7 minutes. 100% move. Okay? Compared to here, in 7 minutes, I had a 9% run. 1, 2, 3, 4, 5, 6, 7. Straight tank in 7 minutes. A pop and a tank in 7 minutes. And then see, but when you catch the initial break, because this is what could happen, that's why you can't get too greedy. That's why you have a set mark of when you want to exit, because you could wait here and then all of a sudden it's tanking and you're losing a bunch of profit. So when you catch the initial break, I mean, it never dips below here. It runs up here, which I would have definitely been out a long time ago. I would have definitely probably been out in this one candle alone. I would have probably, if I'd have caught that break, I'd have been out in that one candle alone. Or if I'd have patiently seen this pull back, once it broke here again in the 250s, once it broke the 250 area here, once it pulled back, I'd have purchased in this candle, and then boom, 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 had a nice run. It's a lesson learned, and that's the whole point of collecting your data, collecting everything you possibly can on yourself to understand. And that's where I understand about my error today. Chased it and tried to play this like it was a low flow, and it cost me a minus 13% in one day. So stick to the low flows, man. That's it for today. KXIN is beautiful example, and I'm glad it happened to pop up now. HTZ, it had a beautiful chart, and it did break the pre-market breakout, but it was just a straight chase. And the volume is heavy, but so is the flow. So realistically, right as of right now, it's trading, almost 2 times the flow, but it's already died out. The shorts and the sellers are in control of it. So it's dead already. And I allowed the beautiful chart pattern to manipulate my decision. When just stay away from it next time. If you look over here and the flow is not in the 20s or less, walk away. Don't even trade it, all right? Don't trade it. If it's not in the 20s or less, don't fucking trade it. Lesson learned for today. All right? So that's it for today. Minus 13% on HTZ. Learned a valuable lesson, but it cost me. So we'll see. I think it put me back even for the week. I'll check it out later. But I was having a beautiful week. And like I said, man, I always wind up taking a step forward, 2 steps back. But the beauty is that you learn these lessons by recording this data. All right?